Starting now, do something, anything on a consistent basis to move forward your dreams. I can't urge that enough. Even if you're doing the wrong thing, start doing something. You will learn to do the right thing. And with us, just spend 10 to 15 minutes every day and start practice trading. Even if you're not sure what you're doing, it doesn't cost you anything, but you've got to do something. If you're not following these charts on a consistent daily basis, if you're not practice trading, you're just listening to my voice as you drive home, you're not spending that time with your daily market worksheet, weekly market worksheet, trade worksheets, just jotting down the entry price and following it, looking at your phone or the charts once a day, seeing what's going on, you're missing out. You won't get this, and we want you to get it. Now, let's jump into these charts. We see stocks are up for the day. Bonds and gold down. Gold just barely down. I'm waiting to see that hammer down on this put position, but we'll continue to be patient and trust in the chart. So what do we see? We see both the S&P 500 up nicely and the Qs up both up nicely. S&P 500 up 1.86%. Now, as we look at the weekly chart right now, we see that price is really sitting right there on the weekly trend line. We have a red spinning top, which means indecision tending down as far as the Heikin-Ashi candlesticks go, but check out the price percent oscillator moving up quite nicely. Derivative oscillator losing upward momentum. That is probably because of the two highs, the latest two highs that we saw back on the week ending. Let's see. The week ending the 5th of June up 321.27 and 322.31. Let's see, 323.41. That was last week. And what we're having is, as the price is devolving as far as the highs go, that's why we see the derivative oscillator, which is a triple smooth version of the RSI, losing energy. So the most important thing is that price percent oscillator continuing to move up quite strongly. We go to the 2-day chart. Again, we're seeing weakening in those candlestick positions. Price percent oscillator heading down, not at the same strong angle it had been because of the up day of almost 2%. Derivative oscillator losing momentum. Again, we can see where the market peaked back on those 4 days between the 7th and the 10th of June. So we pushed through the 2-day trend line. We're above the weekly trend line. We're waiting for things to continue to shake out. Still, market is going up nicely. Things are looking okay. We're waiting to see if that 4-hour chart is going to cross over going up in the morning, and a bit of a slowdown in the afternoon. But we'll, again, price is above that. Weekly, still below the 2-day trend line. So we'll continue to watch, see what there is to see as the markets continue to move. But a nice day of up movement today, and still we haven't been triggered to leave the trade. Why? Because that 2-day chart has not crossed over, and we still just see things balancing. But we are on pins and needles paying close attention. Now we go to the Qs. What do we see there? Well, we see price just above the weekly trend line, red spinning top. And again, we have closed the latest 2-day candle. We'll get to that in a minute. But as we look at the weekly, red spinning top forming, price percent oscillator still moving up strongly, derivative oscillator losing some momentum. Go to the 2-day, and again, a little more than flat. Again, it had been heading down for what looked like was going to maybe be a crossover, but that has stopped. So what we have happening right now is a red spinning top pushing through the 2-day trend line. And again, not good to see that, but as long as that 2-day chart continues to maintain, gives us hope that, again, things may continue on that move. Now, again, you don't have to stay in any of this. We hit our high so far back on Wednesday the 10th of last week. And if you are continuing to play this move out, just pay close attention, particularly to these larger charts, in particular to this 2-day for the time being. Now we look at the 4-hour chart. We can see it pushing above that 2-day trend line in the morning, about the same in the afternoon. Looks like it might be headed to a crossover going up, so look for weakening of that and weakening of, in particular, the 2-day chart, which might give you a forced out. And again, there's all sorts of strategies as to how and when to maximize a trade and to get out. You can always bifurcate or trifurcate your exit points, make 2 or 3 of them at profit high points, and maybe leave a little bit or half left to ride. And again, following these charts up, using the methods that we teach for exiting will help you get the most out of these practice trades. That's where we are on stocks. We're going to go back to the weekly and move on to bonds, which are down, which is beautiful. Down for the day, 1.53%. That's the reason the price percent oscillator is heading down. So far for the week, we have a green spinning top, means indecision tending up. Price is right there on the weekly trend line. And we can probably draw a better trend line now. Well, that's still pretty decent. Yeah, it's going to remain about the same. I don't want to violate a candle, but we're going to leave it with the last with those 2 weeks where we had the down movement. So again, I'm going to zero that in. That's how great free stock charts, freestockcharts.com and TC2000 are. We see price just below the weekly trend line. And again, remember, we're still following that weekly vertical crossover going down, derivative oscillator gaining downward momentum, price percent oscillator heading down. Go to the 2-day chart. What do we see there? We see that 2-day trend line has been violated. We can't really draw another one. We have a red spinning top, means indecision tending down, not super strong down because it's actually an open box spinning top, not a solid red, which means really a slowdown in the up movement. Price percent oscillator, however, was flat, is clicking over, going down a little more. Derivative oscillator losing downward momentum. 4-hour chart appears to be getting closer to crossing over, going down, had pushed through the 2-day trend line in the morning. And so we'll continue to watch, see what there is to see. Price is below that weekly trend line. So we'll watch, be patient, see if stocks are going to continue to move up and if 20-year bonds are going to move down. So far, we did see our peak and down movement back on the week ending the 5th of June. So again, pay close attention to where we are if we start violating that weekly trend line or that 2-day chart, starts to roll over going up. Of course, that would be a very important signal that the move is gone and to seriously consider extracting yourself from that play. Now we go to gold. Gold closed down just barely 0.01% for the day. Going into our second week after the weekly vertical crossover, we have another green spinning top. Indecision tending up as far as what we're seeing on the Heikin Ashi candlesticks. What's our price percent oscillator? The all-important indicator that we use, the primary indicator. It is still slowly pulling away from the red signal line. The derivative oscillator gaining some downward momentum. That's nice to see. It's not that strong. 2-day chart is, again, pulling away. Still hasn't managed to cross over the 200-period moving average line. Be nice to see that happen. Derivative oscillator still losing downward momentum. We can see how much things moved down, but then back up on this latest 2-day candle, retracting those downward moves that were quite powerful. You'll see when those actually happened as we go to the next chart, 4-hour chart. That's where things over the last 2 days really pounded down, was on Monday morning. Looked like gold was just going to hammer down. It did, but then it slid sideways and up a little bit since then. And again, we're still positive on the 4-hour chart, hoping to see that rotate over. The derivative oscillators continuing to lose momentum. Price is right there below that 4-hour trend line. So we'll continue to watch, see what there is to see, what we can follow. I'm still hopeful that gold is going to move down, but we're very much paying close attention to what's going on in gold. So far, all of our weekly vertical crossovers for the year have worked. I hope that this one on gold is going to work. It's getting a little long in the tooth, but again, patience is in order. That's where we are, folks, on our 4 big charts. I've been spending a lot of time interviewing folks for the Advanced Market Mastery class, as we talk about here on the channel. It takes about 5 to 10 years of diligent daily practice for you to really get good at charting. Our goal with the Accelerated Market Mastery course is to help you shorten that by teaching you everything that we know, not only about charting, but about options, and then about building your own virtual personal wealth fund, which is like a little mini hedge fund that you're going to build and then practice trade. We do all that over 3 months plus 3 more months of once a month question and answer sessions to make sure it all clicks in. If you have not signed up for that class, space is limited. It is filling up, and we need to hear from you. There is a cost involved. If you can't afford that, that means, of course, that you need to just keep tuning in every day for the free material, taking your time, learning. And of course, when the time is right, you will know it. Can't tell you when we're going to offer it again, but we will be sometime in the future, I hope, as long as I'm around. It's a lot of energy on my part. I love it. I love meeting all the people, interview everyone personally, decide who gets accepted and who doesn't, based primarily on what people understand about what we do and how well I think they would fit in with the class. I don't just turn people away for no reason, but there's some folks it's just not right for. And again, we're going to start off with basic knowledge and work our way up from there. Some of the best traders I know are not formally educated at all, but they're willing to do the work. They've got some street smarts, and they're willing to do what it takes in order to succeed. If you're interested, please reach out to us, cw@chartingwealth.com. If you just need to stay with the free version, we totally understand. We'll continue to bring it to you every day. And perhaps when the time is right, we'll offer this again and maybe you can participate. So let's keep moving. We're going to go through the other 3 charts. That is Bitcoin, real estate, and oil, all of which are up for the day. Bitcoin up almost 3%, 2.85. Now, what do we see happening? Let's start first, as we always do, with the weekly chart. We still have a red down candle that's forming, even with that up movement. Now, the nice thing, the price percent oscillator, a little less than flat, appears to be heading up. Derivative oscillator losing momentum. So we're still in a confirmed up move on the weekly chart. That 2-day chart just completed its crossover going down. Well, it actually crossed over going down back on Friday, and it's continued to move away from the red signal line, even with the up movement for the day. Not a good sign for jumping in at this point, even with the up move. You want to see at least a 2-day recross. That means a 2-day moves back in the same direction as the weekly. And see, that 4-hour chart is still -2. So what we saw as far as our Heikin Ashi candlesticks go, down movement in the morning, bit of a recovery in the afternoon. So want to be patient. Remember, Heikin Ashi candlesticks are not like your regular high open, low close Japanese candlesticks. They show you average pace. They are calculated differently. We have a great training at the website on Heikin Ashi candlesticks. Actually, I put it at the end of yesterday's program. So if you watched yesterday's program, you'll see the Heikin Ashi training at the end of it. We see that the price percent oscillator is flat, derivative oscillator gaining downward momentum. Got to see a 2-day recross if you hope to jump into an up move on Bitcoin at this point, if that happens. Real estate up 1.97% for the day. What do we see on the weekly chart? A red spinning top at this point, but look at that price percent oscillator spiking up, derivative oscillator moving up. What does a 2-day chart show us? Well, it had been flat to down. It's now, with this latest energy, we can see the price percent oscillators moving up, derivative oscillator still losing upward momentum. Green spinning top. It is green. Indecision tending up is what that tells us, but that price percent oscillator moving up is nice. We go to the 4-hour chart. Maybe we'll have a crossover going up on there. If you've not gotten into an up move on real estate and that occurs, This is our weakest method for actually getting into a move. But if you're just practice trading, might be something for you to look at. Look, practice, learn. That's where we are on real estate. Lastly, we go to black gold. That is oil, up 2.45% for the day. But look how the week's shaping up. A red doji, lots and lots of indecision. Price percent oscillator is still negative. Looks like it might be heading up toward the red signal line. Derivative oscillator's been positive now, going on 3+ weeks. We go to the 2-day chart. It crossed over going up back on the 19th of May. Of May. And went up for another week, sideways for 3 weeks, up for 3 weeks, and then down pretty much over the last 3 weeks. We do have a green, I was calling that weeks. Those are 2-day candles. Crossed over on the 2-day chart on the 19th. Went up for 4 days, sideways for 6 days, up for 6 days, and then down so far for another 6 days. So we'll continue to watch, see what there is to see. That green spinning top shows us indecision tending up, and we'll continue to watch. It's not a green open box candle, so it's a slowdown in the down movement. Again, is continuing to move up. What's that 4-hour chart showing us? Waiting to see if it's going to cross over going up on on oil. So we'll continue to watch, see what there is to see there and how things are going to shake out on oil. But we've just got to see that crossover going up on the weekly chart before there's any hope to jump into it at all. How long is gold going to stay low? Don't know, maybe till the economy gets going again. But this chart will give us a trigger if indeed, when it occurs. We do still run on oil, so at some point you can expect oil to start trending up. That's where we are, folks, as we end the day on Tuesday, go into Wednesday. Remember, at the close of the market on Wednesday, what are you supposed to do? You're supposed to sit back, forget about all that you've looked at on the charts, and just consider what the weekly charts are telling you. Very, very important to do. Once a week, midweek, we teach it, we talk about it. You need to try it. Again, if you're interested, email us cw@chartingwealth.com for the Accelerated Market Mastery Training. God bless, all the best from the whole team at Charting Wealth World Headquarters.